For decades, retirement has been seen as a time of relaxation and reward after a lifetime of hard work. It was a widely accepted concept. Work for 40 or more years, save money, and then step away from the workforce to enjoy the golden years of life. But today, that traditional idea of retirement is rapidly disappearing. Economic uncertainty, longer life expectancy, and shifting global policies are redefining what it means to retire. Many people are finding that the financial security they expected is no longer guaranteed, while others are choosing to continue working, not out of necessity, but because their purpose and fulfillment don't stop at a certain age. In this video, we'll explore the key reasons why retirement, as we know it, is ending, and what the future holds for those planning their financial independence. Retirement isn't what it used to be. The traditional idea, where people work for a single company for decades, build up a pension, and retire at 65, has largely disappeared. One of the biggest reasons for this shift is longevity. People are living much longer today than they did a century ago. In the 1950s, the average life expectancy was around 68 years. Today, it's closer to 80, and in some countries, it's even higher. That means retirement now has to last 20, 30, or even 40 years. With such an extended time frame, the amount of savings needed has skyrocketed, making the traditional retirement model unsustainable for many. At the same time, the nature of work itself has changed. Unlike past generations, where workers often had stable jobs with pensions, today's workforce is more fluid. Many people change careers multiple times, work in the gig economy, or rely on freelance work rather than traditional employment. This shift has created new financial challenges, as fewer people have employer-provided retirement plans. Instead of a clear-cut transition from full-time work to retirement, many are now opting for phased retirement, semi-retirement, or even working well past the traditional retirement age. Whether by choice or necessity, the lines between work and retirement are becoming increasingly blurred. One of the biggest challenges facing modern retirees is financial security. In the past, pensions provided a stable income for life, but today most people rely on 401ks, IRAs, and other investment-based retirement accounts. The problem? These savings are highly dependent on market performance. If the stock market crashes or inflation rises too quickly, retirement savings can quickly lose value. Many retirees have found themselves forced back into the workforce after economic downturns wiped out their savings. Additionally, the cost of living has risen dramatically in recent decades. Housing prices, healthcare expenses, and even everyday necessities like food and transportation continue to climb. In the US, for example, an average retired couple is expected to need over $300,000 just for healthcare costs alone. Yet nearly half of working Americans have less than $100,000 saved for retirement, and a significant portion have saved nothing at all. Without a strong financial foundation, retirement becomes less of a choice and more of a privilege that only a few can afford. As a result, many people are delaying retirement or supplementing their savings with part-time work, side businesses, or investments in real estate in the stock market. The traditional work until 65 and then retire model is no longer practical for the majority. Instead, a new form of financial planning is required, one that accounts for longer lifespans, unpredictable markets, and the need for multiple income streams in retirement. Government retirement programs, such as Social Security in the US and similar pension systems in other countries, were designed to provide financial support in old age. But these programs are under immense pressure. The reason? Demographics are changing. The birth rate has declined in many countries, meaning fewer workers are contributing to the system while the number of retirees is increasing. In the US, Social Security is projected to run out of its trust fund reserves by 2033. If no changes are made, retirees may face benefit cuts of 20% or more. Governments around the world are struggling to address this crisis. Some proposed solutions include raising the retirement age, increasing payroll taxes, or shifting toward private investment-based retirement plans. However, all of these solutions come with challenges. Raising the retirement age forces people to work longer, which may not be feasible for those in physically demanding jobs. Increasing taxes places more financial burden on the younger workforce, many of whom are already struggling with student debt and rising living costs. And shifting toward private investments exposes retirees to market volatility, increasing financial risk. The uncertainty surrounding these programs means that future retirees can no longer rely solely on government benefits. Instead, personal savings, alternative income sources, and flexible financial planning are becoming essential components of modern retirement. With the old retirement model fading, people are finding new ways to achieve financial independence. One of the biggest trends is semi-retirement. Instead of quitting work entirely, many people choose to work part-time, start freelancing, or pursue passion projects that generate income. This allows them to maintain financial stability while also staying active and engaged. Another emerging concept is the mini-retirement. Rather than saving up for one long retirement at the end of life, people are taking career breaks throughout their working years. This could mean traveling, starting a business, or simply stepping away from the workforce for a few years before returning. By distributing retirement throughout life, people can enjoy more freedom and flexibility rather than waiting until old age. Passive income is also becoming a key component of modern retirement planning. More people are investing in real estate, dividend stocks, online businesses, and digital assets that generate income without active work. Additionally, remote work has made it possible for retirees to move to lower-cost countries, allowing them to stretch their savings much further. The concept of retirement is shifting from an age-based milestone to a more fluid and personalized financial strategy. As retirement continues to evolve, financial planning has never been more important. The key to long-term stability is starting early and diversifying income sources. Even small investments in retirement accounts can grow significantly over time through compound interest. Developing multiple income streams, such as rental properties, side businesses, or dividend stocks, provides a safety net in case of economic downturns. It's also crucial to stay informed about Social Security, tax laws, and healthcare costs. Many people fail to consider long-term care expenses, which can drain savings quickly. Maintaining good health is just as important as financial planning, as medical costs can be a major burden in later years. Finally, having a flexible mindset is essential. The ability to adapt to new economic realities, career opportunities, and investment strategies can make the difference between financial security and financial struggle. The end of traditional retirement doesn't have to be a crisis. Instead, it's an opportunity to redefine financial independence in a way that fits the modern world. By planning ahead and thinking beyond the outdated retirement model, people can build a future that offers both security and freedom. Retirement is no longer a guaranteed phase of life. It's a personal journey that requires careful planning, adaptability, and a proactive approach. The old system is fading, but that doesn't mean financial freedom is out of reach. It just means we need to rethink how we approach work, savings, and long-term financial stability. What do you think about the future of retirement? Will it be better, worse, or just different? Share your thoughts in the comments below, and if you found this video helpful, don't forget to like, subscribe, and turn on notifications for more insights on financial independence and the changing economy.